Good morning, everybody. Happy Monday. It's July 6th, 2026, about 8:40 a.m. Eastern Time. Great to be with all of you. My name is Bob Lang, and it's time for our Daily Bites. We bring these to you every Monday and Thursday mornings, roughly, when there's no holiday or if I'm not out of town. About the same time, talking a little bit about markets, the economy, volatility, the Fed, anything that we can get a hold of that can give us a little bit of an edge on that particular day and the next couple of days going forward. So let's talk a little bit about the markets here. First of all, S&P Futures up about 31 handles here. There is a differential, though, between that and fair value. So if the markets were going to open up here right now, we'd be up about 24 handles. There's about 7 handles differential between the futures and the fair value. Nasdaq up nicely, well more than 1% today, bouncing back from a beating on late in the week last week, Wednesday and Thursday. Dow Industrials down slightly. They were at new all-time highs last week, just pulling back slightly over here. Volatility up a little bit. We'll talk a little bit about that in just a couple minutes. Seeing a little bit of a bounce here in semiconductor stocks. Look at Broadcom, SanDisk, Micron, Intel, NVIDIA up a little bit. Marvell up a little bit as well too, so we're seeing a little bit of a rebound after getting hammered last week. The SMH index was down about 5% last week. It's up about 3% this morning. So we're trying to regain some of those lost points some last week. So what have we got going on this week? Well, it's a full trading week, of course, first full week of trading in July, and this is the precursor week to the start of a big earnings season, which is going to be getting kicked off next week with the financials. We'll hear from Goldman Sachs, JP Morgan, Wells Fargo, Citigroup, Bank of America, and Morgan Stanley next week, among other names as well too. And then a much bigger week the following week. That will be options expiration week. So lots to look forward to, but nothing, we can't really dive into that until we finish up what's happening this week. And this week, not too much on the docket other than Friday morning, we'll have earnings coming out from Delta Airlines. Earlier in the week, we'll have Levi's, which comes out Wednesday afternoon after the close. Tomorrow, nothing today, actually. And then WD-40 on Thursday and Pepsi early Thursday morning. So a couple of important names that we're going to be watching that could help move markets. So last couple weeks have been just a real good consolidation in the markets. It's been a little bit challenging and difficult for technology names. And if you've been long some of these names, you know what I'm talking about. But I think that this rotation is very good. It's very healthy into other names that had been lagging from earlier in 2026. We're seeing some good strength in some healthcare names. We're seeing a little bit of a rotation into some of the home builders. And, I still like the metals here. And as you can see in the bottom left-hand side of my montage over here, we see gold's up a little bit. Every time it gets down to about 4,000, actually, I picked up some GLD last week when it broke 4,000. I think it's a good spot to pick that up. Silver, on the other hand, probably in a little bit worse position than gold, but it is actually up more than 1% this morning. Crude oil down a little bit. We're back down under $70 a barrel on crude. The dollar's been rather strong lately. We're seeing yields starting to come down a little bit. I saw something over the weekend that said inflation expectations are starting to come down. That's not necessarily true for 5-year inflation expectations. They've come down a little bit, but not quite as much as you would think. They did bounce up a little bit earlier in the year and came back down to about 2.6 or 2.4% roughly. Again, that's 5-year inflation expectations. They've been rather tame, which is probably one of the reasons why the Fed has chosen not to raise interest rates over the past 5 or 6 meetings. But we'll see what happens down the road over here. I think there was some worry over the jobs report, which came out last Thursday. Only 57,000 new jobs were created. I think the expectation was for about double that. But I don't think that's going to be a huge problem for the markets and for the economy right now. It's still a rather healthy growth of new jobs that are being created. We've had a couple of instances where the number was smaller, and then all of a sudden we bounced back with a much bigger number the following month. So I think we have to keep our eyes open and our options open as well too, to what happens in August when the July numbers come out too. So, but we have plenty of stuff in front of us before then. Economic data very slow this week. We have some PMIs and some ISM data coming out. A couple of Fed speakers will be speaking later in the week, I believe, on Wednesday and Thursday. Not too many of those coming out, and then some home building, home data and sentiment data with housing coming out midweek. So, don't forget, we also have the minutes from the meeting. The last Fed meeting will be coming out on Wednesday afternoon about 2 p.m. Eastern time. So, just kind of, I think what we have to do is just take what we can get right here. If you have some protection, that's good. It's obviously not going to help you today, but certainly coming into the week after a long weekend, it was really helpful and useful to have some protection on, just in case, especially since we rallied a little bit towards the end of the week on Thursday. If that's not working for you today, then just take it off, lift it, and put it back a little bit later on if the market starts to get weaker. I think we're seeing some strength in some areas that will help lead the market higher today, perhaps even into tomorrow. Pay attention to the action, pay attention to the volatility. I mentioned volatility earlier today. The VIX came down a lot on Thursday, and we will pay it back a little bit today. We see the VIX up about 57 cents. It's about 3%, 3.5%. That often happens after the market rests from a 3-day weekend, and after a big plunge in volatility like what we had on Thursday, it pays it back the other direction. So obviously, when volatility is up, we normally see the markets going down. That's not the case today, but still got to be wary and pay attention to what's happening with volatility in the VIX. I'm going to show you the chart of the VIX in just a second here. Let me show you the Nasdaq first. The QQQ, you can see here on Friday, bounced right off the 50-day moving average for the fourth time actually in about 8 days. And it's been a pretty reliable area for the market to bounce. However, you can see here is the QQQs have been making a series of lower highs, which is not bullish. It's been making higher lows, which is not bearish either. So we're kind of in the middle of a no trend right now. Lower highs, higher lows. That's the textbook definition of no trend. If we can get above the recent high, which we're going to call it Tuesday's high, of about 740 on the QQQ. We closed, of course, 712. That's quite a ways to go. It's about 4.5% to go to get up there. If we can get back above that level, then it's game on for the bulls. If we can get a close below 700 here, which has been good support for the QQQ. There, that's game on for the two scenarios out there. 700 to the downside, 740 to the upside. And we're right, literally, actually on the lower end of that range right now. But this morning we're probably going to be right smack in the middle. So, what to do? Watch. Use your eyes. Pay attention to what's going on. Listen to the market. Use your ears. Listen to the market. Use your eyes. Watch what's going on with the markets here right now. No real need to be aggressive here. No real need to do anything. Especially on the indices. Now, on individual stocks, that might be a different story. You might see some momentum going on for particular names, see some good options flow, and go with those with that particular name. Now, take a look at volatility index here, guys. The VIX down below the 20 and the 200-day moving average. That means this is trending down. The trend of VIX is on a bullish signal. My good friend Larry McMillan talked about this last week, and we are down below again below that 17% level. We're going to bounce up towards that 17%, but still not there. So as long as volatility stays low, stays flat, maybe just bounces around a little bit, 2-3% range each and every day, the bulls are going to feel confident. They're going to feel it's okay to go ahead and jump in there and start buying stocks again. So that is certainly going to be helpful. And then, mind you, as I say this a lot, an old friend of mine many years ago talked about how you want to be positioned around earnings season, and he left an open-ended question saying, "Do you really want to be short during earnings season?" So ask yourself that: do you really want to be short during earnings season? And I think you guys all know what the answer is to that. So As long as the again, as long as volatility stays muted here and money flows continue to come in here, I think good feelings right now with the stock market. And it's a good chance we could make a run towards the old highs in the Nasdaq and the S&P 500 before the end of the month. So we're not off to a great start in July. First 2 days of trading and first 2 days of trading in July are down. We'll see if we can turn that around today and maybe later on this week. So that's going to be it, everyone. Hope you guys all had a great long weekend. Happy birthday to the United States of America, 250 years old. What a great accomplishment. It's great to be alive and great to be around when that anniversary happened. And hopefully we'll all be around for the next 250 years, right? So have a great day. Trade well. And I will see you guys all back on Thursday. Oh, by the way, don't forget today, if you're watching it, go to FinTech TV, and you can see it's on my screen right now. FinTech TV. I will be on at about 9:50 this morning, so in about an hour from now, being interviewed on there. So take a look at FinTech TV. Remy Blair is normally the anchor who works with me. She's got a cold, so I'm going to be working with somebody else today. I don't know who that is. Could be this person right here we're seeing on the screen. But anyway, just just a heads up. Take a look at that. Watch that if you have a chance. It'll be live at probably about 9:50 in the morning Eastern time, right after the open. So thanks everyone for spending a little bit of time with me. I can see you guys all back on Thursday morning. We'll talk a little bit about what happened this week so far and talk about the minutes from Wednesday from the Fed meeting and maybe some other ideas that we have in mind. So have a great trading day. And I'll see if you're in the chat room, I will see you guys there a little bit later on. Take care. Bye.